Now, welcome back, and let's get straight into our discussion. I'm joined by the following guests. First up is Alex Mashilo, and he's the spokesperson of the South African Communist Party and an economist. And Redge Nkosi, who is the executive director at First Source Money. Good evening and welcome to the SABC, gentlemen. Thanks for joining us.
Thank you. Good evening.
Now, let me start with you, Alex. It's your colleague, Solima Baila, who set the cat among the pigeons in that ANC meeting. What prompted him to raise the issue?
We have almost 10 million South Africans unemployed. The productive base of the South African economy is very small to absorb the unemployed people. The economy has not been growing. In fact, it has been stagnant. We know that in 2018, we fell into a recession. Technically speaking, we came out there. In the last quarter, which is the first quarter of the year, we contracted by 3.2%. And time is up now. We cannot be given speeches telling the people we will create jobs while we are not making use of...
But why suggest the QE mechanism? Why rise and suggest quantitative easing?
Okay, there are different ways the issue arose. Firstly, within the South African Communist Party. We have got to find a way of making capital accessible, meaning that we must reduce the cost of capital. Investment in the economy is very low. And as a matter of fact, the cost of capital is an issue. Unless you reduce the cost of capital, you are not going to encourage people to borrow in order to invest to expand productive capacity.
But why is it important to the ordinary Thandi or Sipho or Mary or Joel that the cost of capital is lowered?
Thandi wants to have a cooperative. Thandi or Mary wants to start a small business. Thandi does not have capital. If the cost of capital is too high, you cannot start your own business. You cannot start a cooperative. To start those ventures, you need access to capital. It is very important that we lower the cost of access to capital. If the government talks about making it cheaper to make business in South Africa, one big way of doing so is to lower the cost of capital. Our interest rates are very high. Of course, they will not near 0% because of our country risk premium, which is higher than that of a developed country. The country risk premium will be almost the base, our economic base, our zero if you wish. So once you reach that particular point, you've got to explore other views. The Reserve Bank, working together with the Treasury and institutions such as the Industrial Development Corporation, can concession credit into certain sectors of the economy with priority placed on productive sectors of the economy so that we can have people build plants, expand factories, employing the unemployed so that we run production.
Now, I understand that your thesis was on production. Very interesting. I'd love to read it. Weigh in here, please, Reg.
Firstly, QE is very important tool for South Africa. It is widely understood here that while it's going to create inflation and therefore the rand is going to go in flames, that's the understanding. But that's a very distorted view of quantitative easing. That phrase, perhaps, is important for you to have a sense of it. It comes from Japan. It came into being because the word credit creation does not exist, or the phrase, rather, credit creation does not exist in Japanese. So they were trying to look around for the way in which we could tell the Japanese that the way in which you must reboot your economy is through credit creation. So they wangled around the words and found that the word or words closer to credit creation were money stimulation or money easing.
There are many... Oh, okay.
And then, but because it wasn't just about credit creation or money easing, then they wanted the phrase, the quantity of credit creation must be increased in Japan if the economy is to rebound. And therefore, they found words called ryoteki kinu kanwa, meaning quantitative monetary easing. So QE is a short form for quantitative monetary easing. The fundamental pillar around it is that government, through the Reserve Bank, should create credit, throw it into the productive sectors of the economy, thereby stimulating the economy.
But how do we make sure that the version of quantitative easing that you are proposing doesn't end up with the money sitting on the balance sheets of the big banks and taking a hike and going off on the equities markets and not really benefiting the ordinary people, the scenario that Ann Pettifor was describing. And it's very much what happened in the US.
Yeah, well,
and that would increase inequality in a society like ours, which is very unequal.
By definition, QE simply says that money has to be created for GDP transactions, for productive activities. So there's no way you're going to have to use that money for something else different.
Okay.
There's actually a macroeconomic model that gave rise to that. So you can't escape. All these other definitions are distorted definitions of quantitative easing.
So where is this discussion going in this country? What's the future of this discussion? And are people really smoking their socks when they think that there is a potential that this country and this government and the ruling party would ever seriously consider monetary easing and a huge fiscal stimulation package?
Look, the president last year, in fact, we had this job summit last year where commitments were made. It was followed by an investment summit where commitments were made. The president announced the stimulus package. We know that after that stimulus package was announced, we experienced the decline in the economy, the contraction of 2.8%. You cannot keep on doing one and the same thing over and over again and hope to achieve different outcomes. We have got to align our monetary policy with our fiscal policy. In fact, the Reserve Bank creates money every day. The reason why the Reserve Bank governor will go to the microphone to announce a repurchase rate, which is what is called the repo rate, is because the Reserve Bank is creating money by extending credit to the banks.
On that note, we have really run out of time. This is a discussion that can go on, and indeed, I think in this country it will go on for many months and perhaps even many years to come. That's where we have to leave it, Nana. Thank you, everyone, for joining us. To ease or not to ease? Thank you. Good night.